That greed, for lack of a better word, is good. Greed is right. Greed works.
All right, so this all sounds fine and dandy, and people, love to quote Wall Street and the greed is good thing when talking about trading. However, let's take a look at the VIX here and see if greed is really good to stay short. Because yeah, greed is good unless it it makes you like put a silly position on or not take off a position when you probably should be taking it off. And I want to make a couple points to you right now that back up the fact that it might be time to cover at least some of your short if you're short volatility here as we come into earnings season. And I'm just sort of waiting for my Thinkorswim to pop up here. Basically, we've got a bunch of stuff happening now, and we've made a big move in the VIX, and it has come all the way down from highs in just the last couple sessions. And we know the VIX oscillates back and forth, right? The VIX ETPs slowly move lower, but the VIX itself just oscillates back and forth. It goes up and down, up and down, up and down. And it's just gone way down. So how much more you want? There's not that much more room for it to go down before it pops back up. And yeah, there is a scenario where it can move down a lot lower, but that scenario is like the perfect earnings. And probably things are not going to happen perfectly. In general, that doesn't happen, that things happen perfectly. So let's take a look here, and I want to make the case to you that it's probably time to cover at least some of your short if you're short volatility, and possibly even get long. And let me pull up my chart here to show you what I'm talking about. As we go into the Tuesday morning session, and earnings for some of the big financials are going to come out today: Goldman Sachs, JP Morgan, Citi. And as I get out of the way, we can look at the VIX here, and we can see the big move down it has made. Even on that chart, you can see, but let's zoom in a little bit here. Look at this big down move the VIX has made. Now, how much more you want? I mean, it's pretty near the low we had like a month ago. And if we back it up even more, you can see that it's pretty near several other lows. We've had this big move down. So it seems to me that might be time to cover pretty soon, because how much lower is this going to go before we get a pop again? And, you hear me all the time talking about how there's edge to be short UVXY and TVIX and these things, and there certainly is, but it's probably better to pick your points here. Now, I've outlined the bullseye strategy of selling calls and hanging out, waiting until the next week, letting them expire worthless or in the money, either one that happens to roll the position forward. We have a bullseye position on here now in UVXY. And typically, I'm a more active trader, so you'll see me doing all kinds of stuff, not just leaving like a bullseye position on. But we have one on here, which for me represents a kind of almost a less risky trade, more of like a risk-off trade. Right now, we're just short 2 of the October 24 calls. And I'm going to switch my screen so it shows the numbers. All right, you can see short 2 of these calls. And my warning to you is that the VIX is down around 14 and change. Now, this isn't low for 2017, but it's low for 2019. And probably not a bad place to cover a short. I'm not an advocate of getting long, but people that are advocates of getting long, probably not a bad case of maybe get long something in an intelligent way. That might be to buy out of the money. Intelligent way for me to get long UVXY or VXX would be to buy out of the money call spreads. And I would look out to, at this point in the cycle, January, and look at something like the 24, 27 call spread, something like that. or maybe even like the 22-25 call spread. Um, it's not to buy naked calls. I don't advocate that at all. But for me personally, I don't get long volatility products. What I do is when it gets to a point like this, or maybe a little bit lower, I just lay off, take the position off, hang out. Go. I don't know, go to Florida, do something fun. But I don't want to be heavy laid into a short. Yeah, it might work out if all earnings is great and everything's wonderful. We can go lower. Certainly, the VIX could get down to 12. But if you're in the boat, which I'm luckily in for a change here, in that I've ridden this all the way down from up around 28, 29, down here to 22 and change. It looks to me like it's time to cover, and I certainly have been doing that in the last couple of days. I outlined in the last video covering, and if you watched me on Twitch, outlined covering my short deltas slowly, and now I'm at a position where my delta is down to less than 100 delta. It was up, around 300. Now my delta is showing 73. If I move out of the way here, you can see the deltas right here, short 73. And I'm going to probably look to completely take off the position soon, because I'm an active trader. I watch this stuff every day. And just this chart shows that we've made a big down move. It's time to reset and get ready for that next up move that's going to give us a new entry. I've outlined before the strategy of the bullseye position, and that you could certainly play it that way. And I have it on right now as an example. Use my trades here as an example, not as something to just copy and follow, because copy and follow isn't going to work, because middle of the day, I'm going to make a move, and you're not going to know about the move until you see the next video, and by then, the market could be somewhere completely different. So, but short the 24 strike. Now, this could expire worthless by the end of the week, but we could certainly get a pop by the end of the week, too, where these calls become in the money. Right now, they're out of the money, right? Anything above 22.92 is out of the money right now, and they could certainly expire worthless. And if you're the kind of position that just wants to, if you're the kind of person that really just wants to look at your stuff like once a week, then certainly leave the bullseye position on, roll it. If you look, you can leave the bullseye position on. You can come in Friday afternoon and you can say, is it in the money or not? If it's in the money, or if it's in the money or very close to in the money, then roll it just to the next week, same strike. If it's safely out of the money, let it expire worthless, and you just go away. You come back Monday morning and look to reinitiate a position. But if you're the kind of person like me who's following the market constantly, and you want to trade this, then which I'm not saying either one is right or wrong. I'm just saying, what is your trading personality? If you are following this stuff closely and are looking to be more sort of proactive, then it might be time to cover some of this stuff. And if you're the kind of person that wants to get long and take a shot getting along some of this stuff, then go for it. If you're the kind of person like me who just likes to take it off and wait for that opportunity after it's spiked, then it might be time to do that right now. Now, notice I'm not giving you a specific trade. I'm not licensed to give financial advice, so I'm not telling you what to do. What I'm doing is I'm pointing out the fact that that there's not that much more room to the downside in this. Now, you'll see people online say UVXY going to 10 next week. UVXY going to 10 next week is basically impossible. Okay, UVXY could, if the stars align in a certain way, UVXY could go to 20 next week, down another $3. But as we move lower on this chart here, the opportunity for a big move becomes more and more to the upside, right? We've made a nice move down here, I don't know why that chart just switched out of UVXY, but we've made a big move down here, and the opportunity for a move becomes more to the upside the farther down we go here. So just a note of caution, a note of warning. There's not that much room more to the downside for this to go before we get the next pop. So something to think about. I've lightened up, and I'm expecting that we're going to have the next little pop. I don't know what it's going to be, but I'm expecting it's going to be something coming up soon. Notice that like this movement in the UVXY and the VIX, it doesn't correlate with like the news on TV. Okay, you kind of get into that mindset of this. Well, this is correlating with the news on TV. Well, a really bullish, seemingly bullish thing can come out on TV, especially if you're like, let's say you're one of those people who's ultra focused on politics. You're either like pro the president and you're like, yeah, he's doing a great job, or you're really anti the president. You're like, oh, he's doing a terrible job. If you try to trade based on that, these charts are not correlating with the drama unfolding concerning like Democrats versus Republicans and all that stuff. It's not correlating with that. And it's not correlating with like just the news cycle of what news is coming out regarding those things. It is being affected by that a little bit. It's being affected certainly by the trade deal a little bit. But what the market focuses on changes from day to day. And so this, I would stipulate to you, is sort of almost independent of those things. And once again, yes, the possibility of a trade deal, and if we actually do get a trade deal that like goes through, then there's a good chance the market can rally off of that. However, just this day-to-day drip, drip, drip of news is not correlating with what's happening with the VIX that much. So trying to trade it based on your view of what's happening either politically or with the news is going to get you in a lot of trouble. However, just looking at the fact that like, wow, this is at the bottom of its oscillating cycle. You know, the wave came in, and now I'm on my surfboard, and it's at the, we're at the bottom of the wave, and I can look up ahead of me and see the next wave coming in way up there. That's more pertinent, as far as I'm concerned, than what tweet has come out today or yesterday, or how you feel about this this Democratic candidate who's taken the lead or whatever. So focus on reacting to what's actually happening in the numbers and the market as opposed to what news story is on. And sometimes even just turn the news stories off. Yeah, if you see the E-minis breaking one way or the other, then by all means switch over and see what's happening in the news. But to try to trade this based on your view of what the news means is destined to backfire on you, from my humble point of view. All right, so stuff to think about. Let me know how you're doing, what's going on with you, and I'll see you next time.